Hello, everybody, and welcome to this episode of FinServ Tech Oracles. I'm John Burke, CTO of Nemertes, here with my oracular colleague, Jerry Murphy, to share our thoughts on technology for financial services firms. And in this episode, Jerry, I know you're raring to go on the subject of the resurgence in popularity of Bitcoin and cryptocurrency in general. So let's start with what's been happening lately and why should we care?
Most recently, of course, Donald Trump is the president-elect, winning the presidential election quite handily, apparently. And partly as a result of that, Bitcoin is now at an all-time high. I mean, it was down, something that is massively volatile. But since the election, that's currently gone up over $80,000. Largely because of that, and I think really because the world believes he's going to actively push to dramatically soften regulations of cryptocurrencies. The current SEC chair is very anti crypto. He's very distrustful of it. Everybody's thinking that the people are going to uh, replace the SEC chairs with people that are very pro crypto. On one level, it's somebody like Howard Lutnick, who's the Cantor Fitzgerald CEO, who, of course, that sounds one level respectable, but also very pro crypto. But you've also seen on the short list people like Dan Gallagher, who's the CEO of Robinhood. If you remember that one, that's one of these speculative online traders. Another person, Chris Giancarlo, who's had a crypto advisors. So literally putting people that are absolutely pro crypto in charge of the SEC. So that's I think what you're seeing happening is the anticipation that any regulatory hesitation towards uh, all of the speculative things that people see with crypto look like they're going to be set aside in favor of very light regulatory attack and very much making it very easy for the myriad of not only crypto trading floors, but also just speculative currencies to flood the market. So I think that's what's going to happen. Trump himself, by the way, was very anti this stuff, but has become in the last couple of years very pro crypto trading.
Well, once the bread starts getting buttered, it's like that. So what do you see as the implications for financial services?
Well, I think the implications really are you're going to see much more speculation in the market on crypto, which of course is going to lead to massively wild swings on the price, not just of Bitcoin, but all these other speculative currencies. Trump himself has started a a shell company essentially that itself is in the process of creating its own cryptocurrency. So you're going to see a lot of money flooding into this market. You're going to see the trading floors starting to probably make money because they'll start facilitating the transactions of this. Um, so you see a lot of money, but to me, what it's going to be is lots of speculation, right? It's going to be like the gold rush without the gold. The people are going to be running in and, and having all these mechanisms to trade the stuff that are then created before the world really has said, how are we valuing these things? How are we trading a Bitcoin with a Doge coin with a US dollar? I mean, those mechanisms just aren't in place. But if you're going to allow the birth and extension of these things without regulation, if history has shown us anything, is that that's a recipe for, I probably shouldn't say disaster, but it's certainly going to be the recipe for massive speculation.
So what do you recommend?
Well, the thing is for financial service companies, what it means is where maybe in the past they could have said, we're not going to deal with this, assuming we get a pro cryptocurrency SEC chair, assuming that all of these people that the fair shake super PAC, which was largely funded by crypto companies, have succeeded in putting a bunch of very pro crypto congressman in place, what that means is you're going to see more of this. Financial companies are going to have to deal with this. But I think what their job is to really avoid recommending crypto for companies. They're going to have to deal with facilitating and exchanging it. But putting their profits on assuming this stuff is going to go up forever is, I think, a recipe for disaster. And they got to avoid that. They're going to have to work with that, but that doesn't mean they're going to have to recommend it. And I would definitely, for their own financial accounts, work on making sure that their own assets are well protected. I would even put that stuff in isolation in a separate environment when possible, because it is speculation. It is not investment.
So great. Top takeaways for this week then would be to expect a crypto revolution, at least in terms of government policy towards crypto, and steer clear for a good while yet, or bet only on there being wild swings in value for cryptocurrencies.
And I guess the last thing I would say, John, is just like in the gold rush, the people who made money were the people who sold pickaxes and jeans and gold pans, not the speculators. So if you're going to have to be in this business, be on the side of supplying the pickaxes and pans and jeans, and avoid being the person that's putting money into a crypto mine, I guess I'd say.
That sounds good to me. Well, that's it for us until next week at 12 o'clock. Thanks again for watching and or listening. Until next time.
Take care.